Ladies and gentlemen, good day and welcome to Steel Authority of India Limited Q2 FY26 post-results conference call hosted by Nuvama Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashish Kejriwal. Thank you, and over to you, Mr. Kejriwal.
Thank you, Andrew. Good morning, everyone. On behalf of Nuvama Institutional Equities, we again welcome you all for Q2 FY26 post-results call of Steel Authority of India. We are pleased to host Dr. Ashok Panda, Director of Finance, along with his team for this call. Now, I would request Mr. Panda to have an opening remark, and then we can open the floor for questions. Over to you, sir.
Thank you very much. Very good morning, everyone. I welcome all our investors and analysts who are joining this results call for the financial results for SAIL for the period Q2 and H1 25-26. Before we move to Q&A session, let me brief you on the results for this period. We start with economic scenario, global scenario, Indian steel scenario, and performance of SAIL in brief. In the economic scenario front, beginning with global economic scenario, the uncertainties and volatilities stemmed from the tariff war. This continues to impact the demand-supply situation globally, as well as it has got an impact in the domestic market as well. The projections for GDP have improved in line with the same for economies individually as well as regionally, and it has improved the global averages. The IMF had improved its projection for global GDP growth rate to 3.2% in 2025 and 3.1% in 2026. The projections for India have also been revised upwards to 6.3% by various agencies. In the global steel industry front, the global steel industry is weighed down on the adverse demand-supply situation, as some of the largest producers are finding demand lowering in their own geographies. The landscape is influenced by economic trends, trade policies, and technological advancements. While certain regions may benefit from protective trade measures, the overall impact is complex, with potential for increased cost, market volatility, and shift in global trade dynamics right now. That is global steel scenario. And looking at the Indian steel scenario, Indian steel industry continues to enjoy robust demand for steel, with the consumption during H1 25-26, which has grown by more than 8% over the same period last year. This was, however, sort of overshadowed by the growth in production, as crude steel production grew by more than 12% in this half-yearly over same period last year. During the same period, imports have come down substantially, whereas the exports have recorded increase. Yet India remains a net importer during H1 25-26. There is a reversal in trend of import versus export in this half year as compared to last year. During this time, the imports have come down and exports have gone up. Exports have gone up because during H1, the production was more than that of the demand in the domestic market. So that is the reason why there was a bit of oversupply situation in the country, due to which the exports have gone up, and maybe because of this safeguard duty and other things, the imports have come down drastically. That has given some kind of a relief, but because of the oversupply situation in H1, the pressure was on the price front. We hope that in during the later part of Q3 and Q4, the economic pickup, Indian economic pickup and demand will increase, and this will then give a relief to the price front. So the challenges continue on the pricing front as of now, with the global trends not very good, but in India we are expecting that it will improve in later part of Q3 as well as Q4. Coming to the performance of SAIL as a company for Q2 and H1 25-26. The crude steel production steady at 9.5 million tons as against 9.46 million tons during last year H1. The sales volume is at 9.46 million tons, which grew by around 17% from 8.11 million tons during H1 last year. There is a huge increase in the sales volume during this period of H1 so far as sale is concerned. So that has resulted in reduction in the borrowings as well. During H1, we have reduced more than 3,000 crores of borrowing, and that is where the interest burden has come down significantly. Revenue from operations at 52,625 crores in this H1 grew by 8% as against 48,672 crores during the same period last year. EBITDA margin stood at 5,754 crores with a growth of around 3% over the same period last year. Profit before tax at rupees 1,443 crores increased by 28%, and profit after tax at 1,112 crores increased by 32% over the same period last year. Debt reduction drive continues as borrowings on 30th September came down by 3,384 crores as compared to the similar period last year. Going forward, as the monsoon season is over and festivities are over, we hope that the market is going to have an uptick in terms of its demand, as well as the production will be robust, demand will increase, so pressure on the pricing front may ease out and prices may improve. That is the expectation. As the coal prices continue to remain range bound, however, because of the depreciation in rupee with respect to US dollar, there is some impact on the bottom line. But in terms of index of coal price, that is almost kind of range bound. So the margins are likely to improve going forward. That is our expectation. So with these few words, I hand it over to Mr. Kejriwal for opening the Q&A session, please. Is that okay? Is that okay?
Yeah. Renju, please open the floor for Q&A.
All right. Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. The first question comes from the line of Amit Lahoti with Emkay. Please go ahead.
Thanks for the opportunity. My first question is on capacity expansion and CapEx. So currently we are generating a bit of around 5,000. In our capacity expansion plan, what is the capacity and R&D answer?
Can you please repeat the question? Actually, it is not very audible, very much audible.
Yeah.
Mr. Lahotia, this is the operator. We have lost the line of Mr. Lahotia. We'll promote the next. That is Rahul Gupta. Please go ahead.
Yeah, hi. Thanks for taking my question. A few questions. First, any specific reason why realization trends have been better than what we have seen with steel pricing trend during the quarter? Has inventory liquidation has any impact on this? Any color on this would be very helpful. So that's my first question.
Yeah, the answer to this question would be actually even if the sales prices come down in Q2, but we can find that the realizations have gone up primarily because of more sales. Because as we can understand, the sales growth has been there for sale. H1 over H1, it is around 60% growth. So that is primarily the reason. And as you correctly said, this has resulted in a reduction in inventory to some extent, but the production was also good. And at the same time, this has resulted in a reduction in the borrowings greatly.
No. What I am asking is that the decline in steel prices in 2Q versus 1Q was much higher than what your steel realization has reflected into the numbers. So any specific reason for that?
Yeah. The reason for that between Q2 and Q1 is that actually the sales volume of byproducts and the scrap items that has increased a lot in Q2. So we have made a lot of sales of that, and we have reduced the inventory of byproduct as well as scrap items. That's the reason why overall realization is more in quarter two.
What's the inventory for finished steel now? I remember it was around 1.8 million ton last quarter.
Just one sec. Yes, one sec. Yeah, finished steel inventory is 1.9 million tons as on 30th September. But the important thing is that the in-process stock has come down from 1.3 million tons to 0.7 million tons. There's quite a bit of lot of reduction in in-process stock. So if we talk about the total steel inventory, so between opening and closing, the opening was 2.72 in this year and closing is 2.69 million tons.
Got it. One final question for me is any update on iron ore sales? I remember you had got approval for sales. So by when can we expect you liquidating your massive iron ore inventory that you have?
Yeah, let me give you the perspective in this respect actually on 2-3 points on this. One is we've been selling from Odisha Group of Mines, that is from Bolani continuously. If I remember correctly, they've sold around 0.3 million tons. I don't have the figure right now, but it is around that. So that is going on against the target set by us. So far as Chhattisgarh Group of Mines is concerned, we don't have much quantity to sell as of now, but going forward, the new mines is getting opened up, which is Rowghat. Once the production picks up over there, we can think about it. Now coming to Jharkhand Mines, Group of Mines regarding the dump iron ore fines, which is having stock of around 33 million tons. So there are two things are happening. One is we are dispatching, and the dispatch quantity has gone up significantly. We are dispatching this quantity to various sister plants. Like in a month, we are dispatching around 60,000 to 70,000 tons, which is at the rate of around 0.7 to 0.8 million tons per annum. So it is we have increased the dispatches from that dump iron ore fines to various sister units. That is number one. Number two, recently we have put up an auction for 1 million tons of dump fines. So we are looking forward to participation from the prospective customers in that respect. Yeah, that's the answer of this question.
Thank you so much.
Thank you. Next question comes from the line of Parthiv Jhonsa with Anand Rathi. Please go ahead.
Hi, good morning, sir. Thank you for the opportunity. So my first question is pertaining to the sales uptake. We have seen a very good number in H1 and also in Q2, considering the overall market. Is it possible to quantify what is your guidance for FY26 and 27, considering not a major capacity expansion from IISCO, I think, is expected in the next 2 to 3 years, and only debottlenecking kind of a capacity expansion is expected. So can you give some guidance of Q3, FY26 and 27 as far as your sales volume is concerned?
Yeah, let me try to answer this question. I'll just one sec. As you said correctly, actually, FY26-27 will have debottlenecking efforts which are going on. Because of that, the production volumes as well as sales volume will increase. We've been making a lot of strategy to increase the sales, both on the domestic front as well as on the export front to some extent. And as you can see, in H1, we have tried to reduce our inventory volume of steel in totality, and thereby the reduction in borrowings. So going forward in quarter 3 and first, let me talk about the quarter 3, quarter 4, then 26-27. Quarter 3 and quarter 4, we are looking at a reduction in the saleable steel inventory by increasing the sales volume more than that of the production volumes. That means in quarter 3, quarter 4, our production volume is going to increase also. At the same time, increase in sales volume should be more than that of the production volume, so that the overall inventory can come down. Now coming to 26-27, in 26-27, we'll have still a good target as compared to 25-26 regarding our production, because we have debottlenecking efforts which are going on at various steel plants. Certain things we have already done in IISCO steel plant, and we're going to take up at Rourkela steel plant. If the market picks up, then we'll start kind of old furnace and start increasing our volumes as well. So that is the kind of effort. So that is why in 26-27 the volumes will be more than that of 25-26. And because we have got inventory of saleable steel, that will also be liquidated to a greater extent, at least by 50% during 26-27. And onto that the production volume. This sales volume growth will also be there in 26-27 as compared to 25-26. That is our expectation. Also our efforts are towards that, as well as we understand that the steel economy in domestic market is improving. Our economy will also support that.
That's actually quite helpful, sir. My second question is pertaining to your borrowings. We have seen the borrowings going down substantially in Q2, right? Do you expect this momentum to continue at least for next 2 to 3 quarters before the IISCO CapEx kicks in? Or do you expect this to increase, say by the end of 26 and 27?
No, don't expect this to increase, because in 25-26 we are trying to reduce the borrowings to the extent possible, reduce our debt equity ratio to the extent possible, so that we keep a room for IISCO expansion, to accommodate IISCO expansion. The capex of that will start picking up from 26-27. You are correct. We have a target to reduce our borrowings further. The momentum of reduction in borrowings will continue in quarter for this year as well.
Sure. If I may just use a quick question, can you give us some guidance on the coal cost for Q3?
Q3 or Q2? What are you talking about?
Q3.
I mean, Q3 actually, as you can see, right now, what price, sir? I'll just give you. Landed cost quote price. Just one second. Give me one second.
Sure.
As we can see, that in October, the imported coal price in our plant units are around 17,300 rupees, which has gone up from the August level of 16,600. That means between August and October, there is an increase of around 700 rupees. This is primarily because of depreciation of rupee with respect to USD. But now onwards, in this month, by October end, we are finding that the indices have increased a bit. Of course, the indices are range bound, but it has increased from September level of 187 to 194 right now. It may soften, we do not know about that, but it is varying between, say, 185 to 195, in that range. Right now the index is on the highest, little on the higher side, 194. As I said, what about quarter 3 and quarter 4? Because in quarter 3 and quarter 4, the demand is going to pick up everywhere. We believe the imported coal price will remain a little higher as compared to what it is today. Today it is around 17,400 rupees. It may go towards 18,000, 18,100, something like that in quarter 3. I expect quarter 4 will see how it continues.
Should we expect around $6 to $8 kind of a increase in coal cost?
That's what it is. Because from 187 it has gone to 194. I believe it will remain there or more around that figure.
Sure. Thank you for the answer, sir. Thank you so much, and best of luck.
Yeah, thank you.
Thank you. Next question comes from the line of Rajesh Ravi with HDFC Securities. Please go ahead.
Yeah, hi sir. Am I audible?
Yeah, audible.
Okay. My first question is, can you share what is the NMDC volume contribution and revenue contribution in this quarter? And your 18.5 million ton core volume, that remains intact for FY26?
Just one second. NMDC, let me look at the figures. Amount is for this is for quarter. Quarter 2 volume is 3 lakh tons, almost a lakh every month, and amount is to 1,500 crores.
Sorry, 1,500 crores.
Yeah, it is 3 lakhs and 1,500 crores in quarter 2.
Okay. And this 18.5 which you have guided, that remains intact for FY26?
Yeah, that remains intact.
Okay. And you mentioned that because of higher scrap sales and all this time in Q2, your net realization appears to be, better off compared to the normal steel price decline.
Right.
So maybe in Q3 we will have that impact getting reversed.
Pardon?
In Q3, with scrap sales normalizing or lower scrap sales, and given that steel prices have further weakened, we will be looking at a higher decline than the normal steel price decline?
Let me explain you actually. Even if there are pressures on the price front right now, but I believe from November middle or end of November, things should improve and prices should improve. When we talk about last year, this time also from December onwards, there was improvement in the prices. December and entire quarter four remained under improvement. So that is going to improve, number one. Number two, so far as sales of byproducts and scrap and defectives are concerned, we are having our efforts towards that. We will continue to have our momentum towards liquidating those stocks through auctions, frequent auctions and all that. So that is happening in all the steel plants as well as in stockyards. So we are going very aggressive on that. So on that front, the realization will be quite good as well during quarter 3 and quarter 4.
Okay. Okay. And any outlook on the, on the first side, you mentioned that coking coal prices will be higher by $6 to $7, right? In this quarter.
It looks like.
It looks like, okay. And in terms of overall margin, how do you look at in second half versus 1H?
Yeah, because in second half, 2-3 things will happen actually, even if coal price could be little on the higher side, which we do not know at this point of time. And that is also linked with steel market situation. And if this remains at this level, then the steel prices are also going to go up, so it will balance out. That is number one. Number two, in quarter 3 and quarter 4, because our capital impacts are over in all these steel plants, so the production is going to go up and the movement in the furnaces, blast furnaces will improve. Thereby, the cost reduction will be also there actually. So in quarter 3, quarter 4, they will have better cost reduction. So that will add to our profitability.
Okay. And so one last question which I even had asked in the last call, your provisional price table which provisional price revenue, the table which you shared in the footnote, how do we read into those numbers? What do you mean by the cumulative number and the YTD numbers? Because if I look at in Q2, you have mentioned 2,500 crore for the current quarter, and YTD you have mentioned around 4,900 crore, but Q1 you had reported 2,600 crore. So, ideally it should have been 5,100 crore. And then what is the cumulative number which you share? Can you explain what is the working behind those numbers?
Yeah, I'll try to explain. Real price, this is regarding the real pricing. Okay.
Right.
So, that is a constant thing in sale P&L and balance sheet every time. So, the real price has been finalized up to 23-24 and 24-25 is under process. So, that is on track. So, in the tendency of the finalization, what is happening is the provisional price is decided by the joint pricing committee in which there are members from SAIL as well as railways. So, that is why right now whatever revenue has been recognized as per Ind AS 115 in the books of accounts, that is based on the provisional prices. And the provisional prices are already set, like I said. So, in that provisional price, we have got our revenue recognition done, which is in line with the market prices right now. So, once 24-25 prices are finalized, then the differential will also be booked to the profitability, and after that the provisional price will also be reset. So, if with every finalization of the price, the area amount is also put in the P&L account, and as well as the provisional price is reset. So this is a line in the notes to the accounts which always be so as a part of the disclosure.
Thank you. Mr. Ravi, please rejoin the queue for more questions. Next question comes from the line of Pallav Agarwal with Antique Stock Broking. Hello.
Yeah.
Yes, sir. Good morning. So just a question on, you said you expect realizations to improve. So could you give a breakup of how, flat and long prices move between, Q1 and Q2, and currently where spot prices are compared to Q2 average?
Yeah. So Q1 and Q2, just one sec. So Q1, in case of long, quarter 1 was 54,500 and quarter 2 is 49,000. So it is around 5,500 reduction between Q2 and Q1. That is regarding long products. In case of flat, Q1 was 50,400 and Q2 is 48,700. That means reduction of around 1,700 rupees. If you look at the average, actually, on an average, quarter one was 51,700 and quarter two is 49,000. Around 2,700 rupees average reduction in sales price, NSR, during quarter one and between quarter one and quarter two.
Sure, sir. And this was, you saying, partly offset by the sale of scrap and defective. So this didn't show up in the blended realization.
Partly offset by that, as well as partly offset by the input prices as well.
Okay, sure. And so when we give this guidance for 18.5, this is excluding the NMDC trading volumes, because at 0.3 million tons per quarter, maybe we'll touch an annual run rate of 1 to 1.2 million tons. So this 18.5 is only sale production, right?
Yeah, that is on sales production. Sale production.
Okay. And we want to get a rough sense of the profitability on the NMDC trading sales. We have the purchase of material. So is that a fair reflection of the purchase cost on NMDC?
Yeah, there is a fair reflection on the purchase cost on NMDC based on a agreement kind of a thing. So that goes as per that.
Sure, sir. Lastly, you will also just share how spot prices say in October compared to Q2 average. How much are they lower than that?
Which one?
Spot, let's say October prices.
Oh, yeah. Yeah. So October actually long price is 50,000 rupees, 49,900 rupees, and flat is 46,600. So in October, we can say that the prices, flat prices are down by around 1,200 rupees to 1,300 rupees per ton, while long prices are flat. That means in case of long products, the prices are flat in October as compared to September. But there is a downward trend in HR coil prices, flat prices, flat excluding plates, the PM plates. So in PM plates, the price is almost flat. But in case of HR products and CR products, there is a reduction of around 1,200 to 1,300 rupees in October as compared to September.
Sure, sir. Yeah. Thank you so much, sir.
Thank you.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Rashi with Citi. Please go ahead.
Thank you. Sorry, I just missed the October flat realization. You said it was 46,800?
46,600, ma'am.
On the coking coal side, what was the average cost in this quarter?
Average cost in quarter two is 17,400 rupees.
And how much is imported coal?
I'm talking about, imported coal is 18,150.
So that 17,400 is currently trending at 17,300 now? Is that what you said?
17,400 was in quarter two, and right now it is almost at the same level so far as October is concerned.
Got it. On the capex side and on the debt side, so we've got the non-Ind AS debt numbers. Can you just give the Ind AS net debt number for September, please, and also the projected capex for the year?
Regarding capex, we've achieved in H1 3,370 crores, which is above our target of 3,100 crores. And for this year, we are targeting in excess of 7,500 crores of capex. That is regarding capex. So you were referring to the Ind AS and non-Ind AS. Are you talking about the borrowings?
Yes.
You're talking about the borrowings. When you're talking about the borrowings, then just one sec. Ind AS borrowings are 33,663 crores. As on 30th September 2025, and non-Ind AS borrowings is 26,427 crores. So that is the actual borrowing. Non-Ind AS borrowing is the actual borrowing in the books of sale, which is 26,427, which is a reduction of around more than 3,000 crores as compared to the opening.
Good. Thank you.
Thank you.
Thank you. Next question comes from the line of Siddharth Gadekar with Equirus. Please go ahead.
Hi, sir. Good morning. Can you, from next quarter onward, just spell out the NMDC volumes and revenue and cost item in the presentation so it will be more helpful for us to understand how much is the gain from NMDC?
I mean, the quantities and realization we can certainly give for information of everybody. So the gain part is inbuilt in the system, so it may not be exactly possible to quantify that at this point of time.
And secondly, what is the quantum of scrap sales in this quarter?
The quantum, we'll provide that information. Let me try to see if I can. It has gone up quite a lot. Just hold on. 1140,000 crores. 1140 crores actually, as compared to 869 crores in quarter one. So increase of around 200 crores, 250 crores.
All right. Thank you.
Thank you.
Thank you. Next question comes from the line of Samaya V with Avendus Spark. Please go ahead.
Thanks for the opportunity. Sir, on value-added products you mentioned, you did talk about scrap increase QOQ. On value-added products, can you give a similar number?
Yeah, value-added products actually, the total value addition is around 57%. So we've been trying to increase this value-added products quarter after quarter. We are expecting that this will improve further in quarter 3 and quarter 4. If you can compare, in quarter 1 it was 55%, it has improved to 57% in quarter 2, and going forward we are targeting more than 60%.
Got it. So also on the byproduct which you said, which also increased and helped on the realization front, is there any quantum, nature of the product and what the quantum of increase?
Yeah, nature I can explain it to you. Actually, the nature is in the scrap side, defective, rejected, steel, scrap, iron and steel scrap, crude tar, slag and other things put together. So these are the nature of items. The waste material, all the waste material.
This QOQ increase of 200 crores includes everything or it's only the scrap?
It includes everything. Actually, we have been focusing on having frequent auctions for the byproducts as well as steel items. Steel means the scrap items, defective and scrap items, so that there is liquidation of stock as well as cash flow releases. Working capital release.
So any quantum that you can give in terms of inventory that we carry on these items, either in volumes or value?
We have, but we'll be able to provide afterwards. Right now, just in front of me, it's not there, but yes, we do maintain that volume as well.
But as you were saying, this is something that you expect to continue in the next subsequent quarters also, of other auctions and then liquidation of this.
Yeah, we continue that because there are other rejected material and defective metal lying in the subfloor, so that we are trying to bring it to one place and bring it to the yard for conducting auctions. We want to reduce that stock actually.
So one clarification on the long pricing. So one, at an industry level, we have seen a sharper, a rebar price correction, which is close to 6,000 rupees. Whereas as you were mentioning, between Q1 to Q2, only 4,500. What could be the difference? Is it a discount or in the product mix? That is one. And second, you mentioned about current long prices versus September. If you could give a current long versus Q2 average, that would be.
Current long price in October is around 50,000 rupees, 49,940. As compared to Q2 average, of 48,800. That means around 1,100 rupees on the higher side. Current prices are on the higher side as compared to Q2 average.
Thank you. Mr. Samaya, please rejoin the queue for more questions. Next question comes from the line of Kartikeya Kumar with B&K Securities. Please go ahead.
Hello.
Hello.
Yeah, am I audible?
Yes, please.
Yeah, thank you for the opportunity. Sir, I just wanted to understand how much volume growth can we expect in FY27 as compared to, suppose, a provisional FY26?
Just one second. In FY26-27, we expect to have growth of more than 5%. as compared to 25-26. We'll be targeting anything between 5 to 7% at least. That will happen through the debottlenecking processes.
Okay, sir. And then beyond FY28, say like any new CapEx that you are looking at, any update on that?
Yeah, primarily the CapEx will come from two counts. One is the expansion in ISCO, and the other one is the debottlenecking packages in other places. So that is why actually, if in this year we are targeting in excess of 7,500 crores, these are going to jump substantially from next year onwards.
Okay, so can you give a ballpark number or like if it's possible?
Yeah, next year onwards it will be more than 10,000 crores. It will be in excess of 10,000 crores in 26-27, and after 26-27 it will be still further more.
Okay, and just one more question is that I just want to understand what's the long-term debt reduction strategy, like any specific ratio, net debt to EBITDA or something that you are looking at that you target internally.
Yeah. Yeah, on that count, actually now that we are reducing the borrowing, if you look at debt equity ratio on non-Ind-AS basis, it is around 0.46, which is where we want to reduce it down to 0.3, 0.35, or maybe 0.4 by the year end. And after that, from next year onwards, as I have already discussed, that our CapEx is going to pick up. Primarily because of the debottlenecking projects as well as the expansion projects of ISCO. So that is why the borrowings are going to go up. So we are creating a headroom for having more borrowings to fund our expansion projects going forward. So expansion projects are outlined for next 4-5 years in a bigger way.
Okay, and then what should be the proportion of debt or internal accrual that you will use to fund this?
Yeah, we are looking at 50-50% at this point of time.
That's helpful. Thank you.
Thank you.
Thank you. Next question comes from the line of Parthiv Jhonsa with Anand Rathi. Please go ahead.
Hi, sir. Thanks for the opportunity again. Just on the byproduct scrap sales and everything, I just had a very quick question. I believe in this quarter you said you did about 1,140 crores kind of realization from those categories. Considering you have done some recent auction in coal tar and I know where you have been, especially in iron ore, you have received some better interest compared to coal. Is this number expected, and considering you are going to sell more and the quantum in each and every auction is getting higher and higher, is it expected that this number of 1,140 is expected to go up higher in Q3?
Yeah, it is going to go up higher in Q3 and Q4 also, because it is not just coal tar, it is also the defective as well as iron and steel scrap items. And also the slag items. So all put together, this is a bundle actually, bundle of all those plant sales.
Okay. And is it fair to assume that this entire benefit of 1,140 has flowed down to EBITDA and PBT?
Yeah, because it was in the stock exchange, so the differential amount between sales price and the stock valuation rate, that has gone to the PBT and EBITDA.
Is it possible to bring?
And also, because the borrowings have come down, so in terms of reduction in interest, that has also gone into the PBT.
Absolutely. And is it possible to quantify the quantum, positive quantum, what it had on your profitability?
Right, so for example, if there is a reduction of around 300 crores between quarter 2 and quarter 1, increase in that realization. So out of that, at least 20 to 25% has flown into the EBITDA and PBT.
Oh, okay. Perfect. This is quite helpful, sir. Thank you so much.
Thank you.
Thank you. Next question comes from the line of Tushar Chaudhary with Prabhudas Lilladher Private Limited. Please go ahead.
Yeah, good morning, sir. Am I audible?
Yeah, audible. Good morning, Mr. Tushar.
Yeah, thanks a lot for the opportunity. So would like to know the progress of DPR. I think we for ISCO. So can you be give us more details on the projects which are going to come up in second half of FY27?
Yeah, so in case of ISCO, where we are planning for 4.5 million tons of expansion at a cost of around 36,000 crores. So the major packages were already tendered and majority of that are already finalized. Order placement in certain cases have already been made, and in couple of 1 or 2 months, order placement for the balance major packages will be completed. After that, the design engineering will start, and then the physical supplies and physical ground activities will start over there. That means from 26-27 onwards, in 26-27, there will be major CapEx payment towards ISCO packages. So far as order placements are concerned, they are almost on track.
And the rest of the projects, any DPR activities done?
Yeah. In rest of the projects, we're looking at the debottlenecking projects at Durgapur, at ISCO, at Bhilai, at RSC. These are also on track. And in certain cases, orders have been placed. For example, in case of Durgapur Steel Plant, the rebar mill order was placed last year. The ground activities already started over there. In blast furnace of Durgapur, they are also finalizing orders like that. In all the plant units, the tendering processes are going on. In certain cases, orders have been placed and work is already started.
Okay. Sir, one last question on this scrap. You said for 2Q, we sold 1,140 odd crores of scrap.
Yeah.
Okay. Thanks for the...
Scrap and byproducts put together.
Okay. Thanks.
Thank you. Next question comes from the line of Rajesh Ravi with HDFC Securities. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yeah, you're audible. Please go ahead.
Yeah. This byproduct and others which you mentioned in the annual report in schedule, this is mentioned as other secondary and byproduct, which was like in FY25, 3,300 crore revenue or income booked from this.
Yeah, this is part of that byproduct.
Yeah, understood. Okay. This is part of around 2,000 crore is what you have realized in first half.
Yes.
Is this understanding correct?
Yes,
okay.
That's correct.
Okay. And secondly, I was again coming back to your disclosures regarding the provisional price table which you put in. Just want to understand technically what do you mean by the cumulative number over there? Because that number and also the half yearly number, they don't match. The first 2 quarters don't match.
Just one thing, if you can be specific on the numbers, we'll try to explain.
Okay. The standalone on slide number 9 of the result table, page number 9. For this quarter, you have mentioned the number is 2,500 crore, and Q1 this number which you have presented was 2,600 crore. Together should be around 5,100 crore, but half yearly number which is put in this quarter table is 4,840 crore. And similar differences are there even in the last year numbers which I have tabulated. Why this difference? First, and second, what is this cumulative till 30th September number of 13,800 crore? What does that mean?
Okay. Cumulative till date is 13,800. Total provision cumulative. Which includes not only rail items, actually it includes rail as well as defense items put together, anything which is sold to the government. Majority of that is rail items, but after that also we have other items like the quantities which are going to defense from different plants, all 3 plants. This 13,800 includes rail as well as defense items.
Okay, and this half yearly and quarterly numbers, how do we match them up?
These numbers vary a little bit based on the debit advices and credit advices which are concurrent in nature.
Okay. That's all from my end. Thank you.
Thank you. Next question comes from the line of Siddharth Gadekar with Equirus. Please go ahead.
Just a follow-up question. First on the employee wage revision, when do we expect the next employee wage revision to kick in?
Yeah, regarding wage revision, actually it was from 2017 to 2027, so it is 1st January 2027, after which it will be due.
Okay, and so the quantum of increase that we are expecting in employee costs beyond that?
Because there is no guideline right now, actually it will not be possible for us to quantify when we do not know.
Okay, thanks.
Thank you. Next question comes from the line of Vineet Thakur with Plus 91 AMC. Please go ahead.
Hi, sir. Am I audible?
Yeah, you are audible. Hi.
Hi, sir. Good morning. Sir, I just want to know the why is there a reduction in the OPM, sir? As in QOQ and year-on-year as well.
Pardon? Can you please repeat the question once again?
I saw there is a reduction in OPM, QOQ and year-on-year. Could you just shed some light on what is the reason behind it?
Yeah, reduction in OPM between Q2 and Q1 you're talking about. That's primarily because of two things. One is reduction in the sales price, and the other one is actually in Q2 we had taken certain capital repairs and there were some issues with Bokaro steel melting stuff in quarter 2. So that is why there is a reduction in quarter 2 in OPM. But all the capital repairs are over, as well as Bokaro has come back on track. So from quarter 3 onwards, we are expecting good numbers, improved numbers.
So could you shed some light on what would be back to original numbers around 12%, or would be going down, or would be around 11 as per last quarter?
Talking about quarter 3?
I'm talking about the Q1 of FY26 and the Q1 of Q2 of FY24. So FY25 had around 12% and FY26 had around 11%. So I just want to know if it would be around the same number or would be
EBITDA margin you're talking about?
Yes, sir.
So EBITDA margin actually in H1 24-25 it was 12.9%. And average 24-25 was 11.57. Right now it is 11.01%. We are expecting that it should improve in quarter 3, more so in quarter 4 actually. In quarter 4 that should be a good number because every time we find that in quarter 4 things improve a lot. It will go towards 14-15% something like that in quarter 4. So in quarter 3 it may remain flat or may improve a bit depending on how the market behaves. But as I said, all the capital repairs are over, the production is going to go up, so things are looking up.
So another reduction in production as well is due to the Bokaro plant, reduction in production of crude steel.
If we look at the crude steel and hot melt, they are linked to each other. So it is primarily because of Bokaro plant, they had issues with steel melting stuff, which is resolved by now, just a couple of days before. So now it has started improving production.
Okay, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to Ashish Kejriwal for closing comments.
Yeah, hi. Thank you, everyone. And I would like to thank the management to give us an opportunity to host the call and Dr. Panda for patiently answering all the questions. Sir, any closing remarks from your side? That will be helpful.
Yeah, thank you very much, Mr. Kejriwal and all our members who participated here. I'd like to give my closing remarks here. The second half of the financial year is always the best for the steel industry, and we hope the trend would continue in this year as well. Meanwhile, steel demand also continues to prosper, and with improvement on the efficiency front and cost control measures, we'll try to improve our margins in the balance period of the year. Also, the company also remains committed towards sustainable performance, including emphasis on decarbonization, improving capacity utilization, value addition, and achieving cost competitiveness. I thank all our investors for reposing their faith in us, and I'm hopeful that the same will continue in future as well, and we'll try to come up with better numbers as well as the time progresses. Thank you. Thanks a lot to everybody.
Thank you. On behalf of Nuvama Institutional Equities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.